Hello, this is Chris from MarketSwingTrader.com. I'm going to do the daily wrap-up, and what I'm looking at is the SPX, the S&P 500 index. And what I'm looking at is a one-year daily. And right now I'm just going to go over the monthly pivots that we are currently in for December. As you can see here, we had a resistance pivot, and I use the person's pivots with the filter on. So if you are using Thinkorswim, you can use the person's pivots, and I like using the filter set to yes. So we have a resistance pivot right up here at 1346.61. Now we have the monthly pivot at 1227.72. We have the support pivot down here at 1177.9. Now what I've done is drawn a trend line from here to here, and I just kind of drew it up. Now what I'm looking for, if we look back here, I'm looking for a pull back to this trend line and to this monthly support pivot. Now we might get it and we might not. But what I'm thinking is, since we are still below my custom indicators for Thinkorswim, these are the pivot point moving averages, we are still trading below them, and we closed below all of these candles. So what I'm looking for is a slight pullback to the trend line and also the monthly support pivot. Also, when I'm looking at the stochastics, it's still pointing downward. So what I'm looking for is a slight pullback, and for us to get support around here and then to trade back up. That might happen and might not. And also, just a reminder that this is an educational video. It's not an endorsement to purchase any stock, options, or futures. Make sure you consult a licensed financial advisor before investing any real money. If you want a paper trade, I highly recommend it. So that is the SPX, the monthly pivots, and what I'm looking for. Now, on the daily for the SPX, as you can see here, for today, for Monday, I'm going to zoom in. For Monday, we opened up and we started trading up, and we, on a 15-minute candle, we closed above the intraday pivot, but then we started drifting off. And we started gaining support at the support pivot for the intraday support pivot, and then we just sold right off. So tomorrow's S&P intraday pivot points are going to be, the resistance pivot is at 1219.16. The pivot is 1210.70.76, and the support pivot is 1188.56. So what I'm looking for is we could get a bounce back up to around 1210. Now, if we cannot hold 1210 or close above it and stay above it, then what I foresee is for a sell-off. But we have support right down here at 1188 for the Tuesday intraday support pivot. Now the resistance is right at 1219. So if we look in the past here, as you can see, we started trading off and we gained support right at the support pivot. The next day we had resistance, we held the pivot, but then we sold off. So these support pivots are just guidelines that I like to use when I'm trading to see what direction I do want to take. Now, if we do look at the futures, as you can see, the futures, we are moving upward. Stochastics is still pulling back, and we are starting to get to the oversold area. Now, and also the trend line here on the futures, as you can see right here. So we could start gaining support, and we can start moving back upward, but then we're going to have resistance right around 1222 on the futures. So let me switch back over to the SPX. S&P 500 cash index. Now, what I'm looking for is for us, if we do start moving up, then what I'm looking for is to start having a resistance at 1227 for the SPX, and then right around probably around 1250, we're going to start getting a low resistance. If we can trade above that and close above that for this month or even next month, I could foresee us moving upward and right up in here, but even actually right up here to 1350 within the next couple months, if we can close above this resistance trend line right here. I could see us moving back up. But also, just a reminder, these whole numbers like 1300, 1250, 1300, those are some pretty good whole numbers that have resistance, especially this 1300 right here. So that's what I'm looking for. Now, tomorrow, let me switch back over to the 15-minute chart for the SPX. Tomorrow, it does look like a down day for us on the S&P 500, just because these intraday pivots here, the resistance pivot is lower than Monday's. The pivot point is lower than Monday's, and Tuesday's support pivot is lower than Monday's support pivot. When I look at this, I'm thinking a bearish day. Now, I could be wrong, and we could go ahead and close above it, and then Wednesday we'll have to look at the intraday pivots there. But these are guidelines that I do trade off of, especially on the E-minute futures. So that is just the wrap up for the market. I did run a scan to see if any buy triggers did show up to enter any trades, and I believe one did. It was GME or GCC. Here, let me rerun this scan. That was GWW. So if we go over to GWW, Granger, I like running scans, and I have a specific criteria that I'm looking for as far as the stochastics and my custom indicators for things with swim, the pivot point moving averages, and it did meet the criteria. And also, this looks like a pretty good setup because we have the stochastics that is oversold. We were held the monthly pivot point. We closed above the pivot point moving average for the daily. We closed above it. So normally I would look to put on an option trade for this. But the reason I'm not going to do it for GWW is if we look at this, and let's open up the January options, okay? And also if we look at it, we have 29% implied volatility, 29%. So this looks like a pretty good trade. Okay, now if we look at the beta is 0.93, so that's good. I like the beta. It's a pretty low beta. It looks like it will trade in with the flow of the market. It's not very volatile. But the one thing that I don't like about it is that the open interest is very low, and also the bid and the ask. Of course, this is after hours. But then again, the bid and the ask, there's a 40-cent spread after hours on the bid and the ask. So that's a pretty wide spread. So I would not trade this just because of open interest is not very high. And plus the bid and the ask is actually pretty wide. So, but for a regular stock trade, if you have the money to trade $181 stock, I mean, this is, granted, this is only an educational video. But for an option trade, I'm just going to pass on this. This is not going to be on my watch list. And the main reason is because of the open interest and the bid and the ask. The spread is just too wide for me to even think about it I like trading something that is at least a 5 cent spread, if not less. So, and also these are $5 increments on the strikes. You have 185, 190, 195, 200. You know, that's sometimes that can be a problem, sometimes it cannot. Sometimes I walk away from a trade because of that. I don't even put on an option trade because of that. Everything else could be fine. Open interest, bid and ask. But then when I actually put on the trade and run it through the Analyze tab, it just does not work out for me. So I pass. So that's just an educational video of, for why I would pass on this trade. So that is the, let's go back to the SPX. That is the wrap-up video for today. Tomorrow, I'm just going to see what the market gives me tomorrow. Then I'm going to run another scan to see if any stocks in the S&P 500 are setting up for me. And I will see if I can't, if they do set up, they come up on my scan. Then I will go ahead and put them on my watch list. And I will do another market update. Thank you and have a good trading week.